Hey there, folks. How you doing this morning? So I just wanted to continue these daily videos from CNBC, kind of the what's going on in the market. And I really want to give credit first to Gary Vee. I heard an interview with him and Nipsey Hussle. Shows that someday an artist was going to drop a new single every day for a year and maybe call the project 365 or something. And while I was listening to that, I was inspired. I'm like, you know what? It's hard to create daily content, but you know what? The stock market's open 5 days a week. Articles are coming out all the time. Why don't you look at CNBC, pick a headline, and talk about it and its potential impact on real estate investing? So, came home and the stock market was down 800 points. I had no idea. It was a weird day. So that was the first one yesterday. Today, I thought I would talk about, hey, does the stock market gyrations, right? Down one day, up the next day, down the next day. Does that really impact real estate investing, right? That's my experience. That's where I'm at. And so I thought I would talk about that. So it kind of has a lag impact, in my opinion, right? First and foremost, when people feel less wealthy or people feel scared, which can happen on a day where the stock market drops 800 points, where seemingly going into the day, right, nothing was earth shattering, something happens, somebody reacts, and boom, pretty soon the machines take over. And we, the individuals, are looking up at our stock screens going, what happened? And it's nothing that we could have seen coming or, any of that. And this happens a lot when we're at tops. And could happen a lot more in the future when we think about we haven't had really negative earnings surprises. We haven't really had industry shocks or risks, right? Because you have market risk, industry risk, and stock risks, and we're just playing now at market risk with the trade war and all of that. So when stocks have these gyrations, people get scared and nervous. Where that generally leads to, and it'll be interesting to see how August numbers come out, is I wonder how many cancellations of real estate purchases. Now, I'm not really talking about real estate investments. I'm talking about owner-occupant purchases. I have been pretty adamant that I think high-priced markets like the Bay Area are overpriced. I believe that right now the world is priced for perfection. And somewhere, somehow, something is going to come in where people are going to be nervous, right? I saw this in the dot-com crash. I saw this in the '08 crash. It's bound to happen again. And, I don't know if this is the start of it, but it's going to go somewhere. And, those kinds of things. So it's interesting to me to see how first the stock market collapsed or, just in a day, what might happen over in the future. Hey, Patrick, how you doing? I see your question. I'll get to that here in a couple of minutes. Thank you for watching, by the way. So real quick, I think what you're going to see first is you're going to see owner occupants cancel purchases. Now, I don't know if one day, even though it was really aggressive, right, an 800-point drop is enough to do that. I would have guessed if we had an 800-point drop followed by a 500 or 600-point drop, that would be enough to sort of catapult this forward. It looks like the powers that be are trying to play nice and trying to do the right things so that the whole world economy doesn't just come to a grinding halt. That could stop in a heartbeat, right? Somebody could send off a tweet or, somebody could say something in their government-run media, and pretty soon this is all back on, right? We are at precarious times, and we get much more stock market gyrations to the negative. We could see home cancellations, and then what happens there is the press gets a hold of that. They start talking negative about home prices and cancellations, and pretty soon that ripples over to the monthly numbers. Case Shiller gets a hold of that, and his numbers come out bad, and then pretty soon we're into impacting real estate investors because everybody gets scared, right? Unemployment goes to 5.5 or 6, and these things are all connected. And I truly believe that real estate investing, the thing that I do, the thing that pays my bills and keeps my family afloat, it's really greed and fear that kind of do this. And we've been on the greed side of the pendulum for 10, 11 years. It's a long time, right? We're due for some adjustments. And, the sad thing is I think a lot of the individuals out there who have been telling me for the last 2 or 3 years, "Hey, I'm going to wait and do something." If we go through a soft patch, a lot of them are going to see all these headlines and be scared. And, that's why I spend so much time trying to help people. You know what? Just stop all the madness, stop looking at all the shiny objects, go learn your market, right? That's why I try to help people. I mean, if you just learn your market and your market says it produces a 6 for a single family home, whatever that is, if it goes on sale and suddenly it's an 8, you can feel good about yourself. I call it putting on a suit of armor, because all of your friends and all the people around you are going to tell you it's a bad idea. But if you've done the work for 90 days and you put on this suit of armor, you're going to be able to go, you know what? With certainty, I know that this is a good investment. And again, we wrote about it in the book. We did that a whole bunch, and we started buying in 10, even though the prices kept coming down. We didn't know where the bottom was, but we knew stuff was on sale. And we knew it was on sale because we did the work early. People, this is the time. This could be an inflection point in the market. Use this time to get educated. Do your homework. Figure out what's going on in your market. So when or if it goes on sale, you know it. So that's what all this is happening. And so, yes, I think stock market gyrations can impact real estate. First, it's going to hit owner occupants. Then it's going to hit real estate investing. Let's go to a couple questions from Patrick, who's nice enough to watch, and we'll just go in the order that I received them. He says, "Hey, mentioned you like turnkey." I think he's like, "Oh yeah, are you a turnkey provider?" So first and foremost, I've done math, and in today's market, in most markets, it's better to buy a clean property because you can finance essentially the repair costs. I made the mistake, and I document it in our book back in 03, 04, 05, where I bought cheap, right? Today it's called BRRRR, right? I bought cheap with the idea of spending 20, 25 grand on the remodel and then having all this equity. It's true. You can force equity. I happen to be investing in a market that wasn't in my backyard. So I created a lot of unknown risks that were, that as a new investor, I shouldn't have, right? I should have just bought clean and been happy. I certainly think in today's market, most markets, it's better to buy clean. And like I talk about in the course, just do the math, right? Buy the better deal. I figure out what the better deal is today. And sometimes if they're priced cheap enough, a junky slumlord property is the better investment. It's just not for most people. Then he asks, "Are you a turnkey provider?" No, not really. I'm not anything other than an author. I have created a couple of I've bought some stuff, and now because I'm retired and don't have anything to do all day, I do buy ugly and then repair them and sell them. So I guess you can call that a turnkey provider, but I certainly don't. I don't have scale. I don't have employees. I don't do but maybe one a month, those kinds of things. So I don't know if that's a yes or a no answer. That's kind of where I sit. I think it's a follow-on question. Do you like turnkey over BRRRR? I think is the real question. And again, I think, frankly, I think BRRRR is a genius move. In most markets, I think BRRRR today, with the market rolling over, is a mistake. And I've been pretty clear about that. I think people selling the BRRRR idea have been really successful for 5 years. But at some point, all things stop being the right idea. And I think BRRRR is right there as well. I think, especially if you're BRRRRing out of state, I think that is so ripe for mistakes for you being taken advantage of. I've heard from people since I've been putting out this idea that BRRRR is the wrong idea, talking about losing $50,000, $60,000, $70,000 on properties that they spent 40 grand on. So I think, I would be very, very nervous trying to BRRRR out of state as your first investment. I think if you had a team and you have some track record and all of that, it could be interesting. Then he goes on again. I'm just reading Patrick in order. I live in LA, so that's out though. I think he's saying that LA is too expensive. And yeah, I think where I live in the Bay Area, it's too expensive as well. I've got some money. I have a good job, but I have time. Where would you start today? Oh, okay. So yeah, the thing that I would do today, because as I write about in the book, there's only 2 times in my 15 years that I paused. It's because the world got different. And one of them was at the peak in '08. And just if you haven't read the book, the story goes, we bought a house for 100. It was sold for 260 about 30 months later, but the rent never changed. So that was the environment we were trying to buy in '06. And it just didn't rationally make sense. So what we did is we started 1031ing into apartments. So we got out of houses into small apartments and we were fine. And then suddenly the market went crazy, right? It went crashing. And we had never experienced anything like that. So we sat on the sidelines. But I mean, when I say sat on the sidelines, I meant we didn't buy anything, but we looked every day. And that's what I think you need to do today. That's what I'm trying to help people understand is today's the day where the market is adjusting, where you should go and try to figure out when something's on sale, because this little hiccup with the trade war and all that in theory, that could be over by the end of the week and we just go off to the races again, right? Fed cuts rates again and assets just get inflate and all that stuff. So those are the things that you need to watch for. So what I tell people to do today at this rollover is look in your market every day. So Patrick, something you could do is maybe, I think if you're like me in the Bay Area, or you're in LA, I'm in the Bay Area, both expensive markets. I think I would do 2 things. I would go and pick and I talk about this in my course, I would go pick an asset type, maybe a 3-bedroom, 2-bath, 2-car garage, 1,600 square feet, 6,000 square foot lot, whatever it is, whatever you have a lot of in LA, pick a zip code and watch it every day. And I think what you're going to see in LA is you're going to see stuff go on sale. And I think it could get pretty ugly. But also maybe what you do is I clearly like to pick things that are in driving distance. So Patrick, maybe for you, that's the Inland Empire. Again, do the same thing. Pick an asset type, pick a zip code, and just watch it. Inform yourself. Get smart. Don't be in a rush to spend the cash that you've worked so hard to save. Get educated. Figure out when the sale happens. And if you don't know how to do that, I give away this online course. It's next to nothing. It's less than $200. But what you can do with that course is you can start working on it, look at it. You can join the private Facebook group with all my other students and we can interact every day. But what you're going to do is you're going to put on that suit of armor and try to figure out what's on sale. So that's what I would do. What is the right idea today? I think the right idea today is hit the pause button. This isn't quite Bear Stearns going out of business bad, but in my investing career, I've never seen a trade war, at least one of this size. I mean, in all the nationalism going on, and this could get very, I just don't know where this goes. And when that happens, just like in the '08 the '08 crash, and then when the hedge funds came in at the bottom, right? Those are the 2 times we paused. And I think today might be a pause, especially if you're in a high price market, because I think we could see some interesting things. We got a new question from Jonathan. Hello, have you ever built new construction single family? No, I haven't. I've never done ground up. The place that I live in is my primary residence, was a ground up development, but we've never done that as an investment. I think in an environment with a trade war where supplies might come from overseas could get interesting. You just got to control costs. And again, I'm not sure where you're talking about. I think there are some states that are easy to build single family homes, not being California for one of them, right? Just given the regulations and costs before groundbreaking. I've never done it. I'm not a great expert at it. There are other experts to do that. So I'm sorry, Jonathan, I don't have a great answer there for you. One more thing, I'm doing a 1031 exchange into live workplaces in Los Angeles. So you're going to net some significant dollars and you want to move that money into live workplace. I think that's a great idea. One of the things that we did during the peak for us, I think it was like '07, '08, is we moved out of houses into apartments because frankly, houses were too expensive. And the 1031 exchange is great. If you don't know what it is, check it out. And, we were very, very happy. Our cash flow went up significantly. Our net worth still went down because when the crash happened, everything got taken down. But again, what people don't realize is the only person who cares about your net worth is you, right? Your banks, your lenders, your utility providers, they want cash, right? You can't spend your net worth, especially in a down economy where banks turn off lending. So you spend your income statement, and our rents went, tripled, right? We had a house that was 1,000. We bought a 5 unit that was 3,000. The price was roughly the same. So it's pretty cool. So um, thanks for the advice. Been studying good. Been studying hard for 3 years. Awesome. This could be your time. It could be coming. So thank you for the subscription. And Jonathan says thanks. So all right, guys. So that's today's video. Again, I think what we're in now for the stock market gyrations can absolutely impact real estate. I think it impacts owner occupants first. So that's what I'll be looking for, is cancellations of escrows. I think that's where this hits first, where people get nervous and go, "Ooh, I don't want that big house or that big mortgage payment. I'll stay where I'm at." I think if people get that nervous, that's what we'll see first. We'll see cancellations of escrows long before we see an uptick in unemployment and things of that nature. So that'll be the indicator I am looking at first. So have a great day. We will do another one of these YouTube lives tomorrow. Again, thanks to Gary V. Have a great day.